Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the stock market today? Well, Dow's having a down day, down about 200. Nasdaq's down about 100. I guess that Santa Claus rally just disappeared. It doesn't look like it's going to happen. Now, here's what's really going on. All right, so we were sitting on the SPY. We got up at 410, and we came all the way down to 380. But now this 380 level, we've been stuck there for 2 weeks now. We've just been moving sideways. Now, nothing goes straight up. Nothing goes straight down. I suppose if we continue to move sideways, we can resume the move lower. But I actually think we're going to get a little bit of a bounce from here, a little bit of a rally. You see, we have this gap up above that's sitting around the 396 level on the SPY, and it's going to come up and fill that gap, and then we're going to head lower. Now, that's my take on the market. Your take may that we go straight down from here. I'm not saying that's not possible. We've been moving sideways and it's ready for the next move. Now, I'm thinking that the move will get a bounce up to that 396 to maybe even 400 level. But after that, I do think we're coming down lower. Now, you see, last Thursday, we had that big down day, but that low has held up. We have held up at that low. We haven't broken below it. Now, if we broke below that, well, it looks like we'll go down farther. But so far, that low has held in place, and I do think we'll get the rally back up to the 400-ish level on the SPY. We'll see how that all plays out. All right, let's move over to talk about a few things I want to discuss here before I get into the real estate market. Well, I want to talk about this spending bill, right? Well, anyways, we got this spending bill of $1.7 trillion. Now, do you know we have an inflation problem going on in the U.S.? Now, we're at 9%. I guess we're down around 8%. But what people don't really understand is that inflation, it comes in waves. All right, so the first wave up was to 9%, and now we pulled back 8. Maybe we're even down to 7% now. But there's another wave coming. Even if we get down to 6 or 5 or 4 first, there's another wave coming that's going to shoot up above and take out that 9% rate. There's going to be more inflation coming. Inflation comes in waves. It kind of goes up, down, but it never gets back to where it was. Up higher, down, never back to where it was. Up higher, inflation comes in waves. And look, at this spending bill is nothing but inflationary. And now I'm not even going to criticize the politicians here. I mean, there's just some things you can't fix. And well, stupid is one of those things, all right? You can't fix stupid. Look, I used to be a basketball coach, right? All right, and here was 2 things that my team had that I couldn't fix. All the players were short. I couldn't make them taller. I wanted to make them taller. Also, all my players were slow. I wanted to make them faster, but you can't teach fast. You can't teach how to be tall. These are things you can't fix. And look at our government. They're just stupid. You can't fix stupid. They're going to continue to be stupid until everything blows up, of course, and then maybe we'll get rid of them. Well, until that happens. But look, inflation is very scary, right? And inflation, if we get into what's called hyperinflation, that's the worst thing possible a country can have. Now, everybody isn't up in arms about this spending bill because, well, they think it's free, $1.7 trillion. They think that's just free money. And, well, the government will tell you we're not going to raise taxes. Well, you're paying for this. You're paying for this in form of inflation. Inflation is a big tax. That's how you're paying for it. Everybody's going to pay for it. Look, inflation is the biggest tax, and I suppose it's a fair tax because everybody's got to, who buys anything, they have to pay that tax, right? Well, that's what's going to happen, and I don't like it. Now, the good thing about hyperinflation is it might keep your house up. It might keep the houses from coming down if we hyperinflate. Now, people tell me, but Mike, we can't hyperinflate. We got the reserve currency, and they'd be correct. The reserve currency has never hyperinflated, but our reserve currency is even going away. Do you know why? Because we're using our currency as a weapon. We use as a weapon against Russia. Now, who else would be next? Maybe China worries they're next. Russia, that's who we're going to use this currency against. Our currency is a weapon. That's why we're going to lose the reserve currency. Now, it might not happen tomorrow, but it could. Look at, what if Saudi Arabia said, okay, we're only going to take gold for oil. Then the petrodollar goes away and our reserve currency will follow the petrodollar. Look at Russia right now is talking about trading gold for oil. They want to exchange the two, right? They don't want currency. They don't want the U.S. dollar. The U.S. dollar, we can print as much as we want of this currency, and we can buy, well, we could buy all the oil because we can print an unlimited amount. We could buy all the gold. We could print an unlimited amount. But eventually the rest of the world is going to get wise to this, and they're going to start to not accept the dollar as currency. They're going to start to accept things like gold, and that's going to take us off the reserve currency standard. And this is why we could hyperinflate even in the United States. Now, all right, so once again, that may keep your home price higher, but I don't think so. I pray we don't hyperinflate. All right. Now, here's what's going on. All right. 63% of U.S. households, well, they go live paycheck to paycheck. 63%. Now, that's shocking to me that so many people are living paycheck to paycheck. They have absolutely no savings. Now, when they do a survey, I don't think it's any coincidence that 63% of the people want more stimulus. They want more stimmy checks. Now, it's so frustrating to me. I know a lot of people don't have, they're not educated in finance. They just aren't. Look, if you do more stimmy checks, you get more inflation. So let's say we give everybody that $1,000, which is what UBI, Universal Basic Income, they want to give everybody $1,000 a month. Well, this is very inflationary, right? And so, yeah, it works great for this month, but next month the price of food is this much higher because we gave everybody the stimmy check. So you're good for 1 month when you get that stimmy check and you go out and you do that little party dance, but then prices go higher and they never go back down. Stimmy checks, what it does, it makes the rich people like Bezos, like Warren Buffett, it makes them very wealthy, and it makes the poor people where they're going to be starving. We got to get off this stimmy check thing. We got to get off the socialism bandwagon. They don't work. They just send inflation higher and make the rich richer. All right. So right now in the U.S., 1% of the population is controlling 38% of the wealth, and everybody's upset about that, and I agree. That's terrible. It's worse than it was in the Great Depression. But stimmy checks is just going to make this more extreme. Now, if you take 10% of the population, well, they control 78% of the wealth. 78% of the wealth. And yeah, that's terrible. But if you print more money, it's going to make Bezos richer. It's going to make Buffett richer. And the middle class is just going to be gutted. It's just going to go away. And that's what's happening in the U.S. right now. We got to get off this stimmy check. We got to get off this $1.7 trillion spending bill. Where's that money end up? Does it end up with the poor people and equal everything out? No, it ends up in the rich people's hands. Stop printing money and we won't have this big extreme. Now, I want to talk about the housing market real quickly here. All right, the housing market's going to continue to come down. Now, everybody says, well, Mike, there's no inventory. And I'm just going to talk about one thing today where the inventory is coming from. And that's from people that are getting ready to retire. People that are my age are very worried right now. Now, why are they worried? Well, we have some savings, right? We have it in the stock market. What's the stock market do? Well, it's going down. Okay, but you see now older people like myself, a lot of the financial advisors, what they do is they tell older people to put more of their money into bonds and less into stocks. Now, this is one of the first years where the bond market and the stock market both came down hard. So people that are getting ready to retire, they're looking at their retirement plan and it's just non-existent. Look at over 50% of baby boomers have absolutely nothing saved for retirement. And a lot of people Their only retirement savings is their house. Now, they got their house. They bought it a long time ago, the old people. You see, now, old people, well, people over the age of 60, the percentage of homeowners is like that, percentage-wise. People under the age of 30, it's like this. But there's going to be this big shift back to normal. Things are going to shift back to normal. It's just how it's going to work out. But you see, you got these retired people, and they're looking at the stock market crashing on them. They're looking at the bond market crashing on them. They're going, well, that's my life savings is in that house. And now that house has already dropped 10%. Now they're worried right now because if it keeps dropping another 10%, let's say it's down 20%, this is the money that they're planning to retire on. They're going to eventually FOMO out. They have a fear of getting out right now before it comes down 20, 30, 40, 50%. And so us baby boomers, these houses are going to be dumped onto the marketplace. They're going to be coming onto the marketplace, and that's going to crash the numbers down so that you young people, you know, in the 30 to 40 ranges, you'll be able to pick up these houses for pennies on the dollar. It's the way it's going to work out. Now, you see, it's not working out right now that way. Now, why is that? Well, sellers are different from buyers, right? The buyer looks at things for going forward. They look through the windshield. But the seller, he's looking in the rear view mirror. He's looking in the rear view mirror, and you know what he sees? Well, he sees Billy Bob waving at him. Billy Bob got out at the top, and that seller's very upset because they want to get what Billy Bob got out at. Billy Bob got out up here. His money is in savings. He's 50% cash. The other 50% he has in the metals market, in gold and silver. He's saving for that big correction, and that correction's coming. He's ready for that big shift. That big shift's going to be about a 20 to 1. That shift is going to be the biggest wealth transfer in the history of the world when it happens. And I'm telling you, it's going to happen. The retired people, the baby boomers, are going to be dumping their houses onto the market because they have all their net worth tied up in their house. And when they see their net worth evaporating 10, 20, 30, 40% down, they're going to just be jumping into the market. They're kind of going to be forced into the market to get out at any price they can to save any remaining equity they have in their house. That's what's going to bring some of the inventory onto the marketplace. Now I'm going to talk more about that inventory thing on Friday. So you want to hit the thumbs up button. You want to hit the subscribe button so I can talk to you more on Friday. I'm Tall Mike. It's kind of the holiday week. Things are a little slow in the markets right now. I hope you have a great holiday week. Get out there. Enjoy it. Everybody give me that thumbs up. Why not? Why not? It's Wednesday. Bye-bye now.